So you've submitted your taxes and crossed that off your to-do list for the year. But then you get a "we need to talk" note from the IRS. Ever wonder how to safeguard your tax returns against IRS audits? Stay tuned as we unravel the secrets that healthcare contract workers should be aware of. Hi, healthcare travelers. Today, we're tackling a topic that might send shivers down your spine: IRS tax audits. But fear not, whether you're a travel nurse or an allied health pro, I've got your back. I've partnered up with the author of our blog on this topic, Rachel. Rachel is a CPA with over 5 years of experience in public accounting, with experience in all areas of accounting. So without further ado, let's jump right into how you can become audit-proof. First off, what makes healthcare contract workers unique in the IRS's eyes? When you take travel contracts, depending on the agency, you may be a W-2 employee or a 1099 contractor. Most simply put, a W-2 form is a record of an employee's income, taxes, and benefits throughout the year, whereas a 1099 form is used to record income received by independent contractors through the year. In the case that you are being paid as an independent contractor, the IRS views your employment as a small business. So you'll want to make sure that you understand how your agency plans to pay you throughout your assignment. Additionally, the IRS maintains stipend rules for travel nurses and allied pros. These can quickly become complex, raising additional IRS red flags. So for starters, you'll want to make sure that you view our video on stipends, tax homes, and other tax considerations for traveling healthcare pros. If you're opting in to receive stipends as part of your pay, you'll just want to make sure that you check the boxes to make sure that you're eligible to receive those stipends from a tax perspective. Both of these things can be reasons for a bit more scrutiny by the IRS. But don't worry, let's talk about some other red flags that you could potentially raise and how to avoid that. So what else could make the IRS raise an eyebrow at your tax return? For one, large losses. Anytime that you take a significant loss on your tax return, you put yourself in a higher risk position for an audit. Capital losses occur when you sell an investment for less than you paid for it. This applies to investments like stocks, bonds, mutual funds, cryptocurrency, and real estate. This amount can be deductible on your tax return. So there are just a few rules to know when you're reporting a capital loss. So just be sure to check in with your tax professional when filing to make sure that you're not raising any flags. Second of all is those stipends that we mentioned. The IRS sets guidelines for travel nurses and allied health professionals, requiring that you do not double dip by deducting stipends and the expenses that the stipends are covering. You'll also want to make sure that your agency is only paying you the allowable amount in stipends that has been set by the GSA. Any amount in stipends that you're receiving over this limit that's been set could be a reason for them to take a closer look at your tax return. Third are deductions. Expenses are only deductible when cash leaves your account, even if they relate to the next year. So you'll want to be sure that this is in line with how you're filing your taxes. Let's say that you pay for your license renewal at the end of the year. Although the renewal relates to your next year, it would be deducted in the current year because that's when the cash left your account. And finally, this is an important one for healthcare travelers, is the 1224 rule. IRS guidelines for travel nurses and allied health pros state that you can't stay in the same location for 12 months in a rolling 24-month period because this can change your tax home and therefore affect your stipend eligibility. So if you've worked 7 months over the course of 1 year and 6 months the next year, but in the same location, you're still breaking the 1224 rule. So this is just something to keep in mind and consider when you're extending your contract or returning to a facility that you've really enjoyed. So now on to the lifesaver. How are you going to get through an audit? It's all about documentation. Keep every receipt, contract, and record for at least 3 years. Organize them like your life depends on it, because in an audit, it kind of does. If you work with a tax preparer, be sure that you request your documents back after filing so that you can keep them in your own records. I know it can be hard to stay organized as you move around every few months, but be sure all of your documents are in one central location. This gives you the ability to easily provide supporting information to the IRS in the case of an audit. Storing your documents in something like Google Drive so that you have access to them no matter where you're traveling to is a great idea. So to wrap it up, being audit ready is like having an umbrella on a sunny day. It's about being smart, not scared. With these tips, you'll be prepared no matter where you are if an audit occurs. And hey, you may never be audited, but at least you can rest easy knowing that you're playing by the rules and have the documents to show it. With tax season upon us, be sure to share this video with your friends if you found this information helpful. And don't forget to check out our full tax guide for travelers in the description below. Happy filing!